Good morning, everyone, and happy Wednesday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. We've made it halfway through the week. This morning, we'll be taking a look at some exciting stock market news, notable earnings reports, and which stocks are this morning's biggest gainers and losers. Don't forget to follow us over on TikTok as well under the username TipRanks. We just broke 9,000 followers, and of course, I'm pretty excited to get to 10,000, so make sure you go check us out over there. Now let's get right into this morning's exciting stock market news. U.S. stock futures are fairly flat and slightly mixed. Right now, the Dow futures are down 0.04%, while both the S&P 500 and NASDAQ futures are up 0.03%. The roller coaster of Bed Bath & Beyond continues. This time, the stock is on the rise after it said that they've secured lending for operating cash needs and to pay down debt. The retailer has been burning cash at a rapid rate and needed to raise more money to keep business running. In their last quarter, their operations consumed more than $500 million in cash. They were seeking a $375 million cash infusion and turned to JP Morgan to help. They've now secured funding with a lender, but the terms and size of the deal remain unknown. Of course, analysts are not a fan of this meme stock and do rate it a strong sell with an average downside of 60%. Online luxury fashion company Farfetch has reached a deal with Richemont to acquire a 47.5% stake in an Italian online retailer, Yoox Net-a-Porter. The initial stage of the transaction is expected to be completed before the end of 2023. They'll initially acquire a non-controlling stake, which will lay the path forward to potentially buying remaining shares in the future. Richemont expects a $2.68 billion write-down related to the deal as well. The deal will enable Yoox Net-a-Porter to implement Farfetch platform solutions to facilitate its transition towards a hybrid retail marketplace model. Analysts currently rate the Farfetch stock a moderate buy with an average upside of 95%. And eBay has acquired MyFitment for an undisclosed amount to help increase their automotive parts sales. MyFitment is an e-commerce platform that offers software tools to sellers of automotive and power sports parts and accessories. Their market is expected to reach a whopping $140 billion by 2027 from the current market size of $19 billion. eBay's move to acquire a leading player in this space aligns with the company's growth strategy. This adds to eBay's acquisition spree as they recently purchased TCG Player for $295 million, which is an online marketplace for collectible card game enthusiasts. Analysts currently rate the eBay stock a moderate buy with an average upside of 18%. Now moving over to notable earnings reports. In the pre-market this morning, we'll be hearing from Petco, iMedia, and Dycom Industries, while the after hours we'll be hearing from some bigger names, including NVIDIA, Salesforce, Snowflake, Williams-Sonoma, Splunk, and Victoria's Secret. Last night, we heard from financial software provider Intuit. They posted better than expected results for their quarter. They posted adjusted earnings of $1.10 per share ahead of the estimates of 98 cents per share. Revenue also came in ahead of forecast at $2.41 billion, ahead of the $2.34 billion predicted. Their CEO said that we had a very strong fourth quarter, ending the year with momentum. We're more confident than ever in our long-term business strategy as we power prosperity around the world. Analysts agree and rate the stock a unanimous strong buy with an average upside of over 20%. We also heard from department store Nordstrom. Their stock is falling after they lowered their full-year outlook. While their results did exceed analyst expectations, they're now expecting full-year revenue to climb between 5 to 7%, down from the prior range of 6 to 8%. They reported adjusted earnings of 81 cents per share ahead of the 80 cents expected, and revenue of $4.09 billion, beating the estimates of $3.96 billion. Nordstrom is one of many retailers that has lowered their future expectations as the consumer landscape changes. Analysts currently rate the stock a hold with a slight downside of 4.7%. In the pre-market this morning, we heard from the Royal Bank of Canada, who did miss on expectations. They earmarked provisions against possible loan defaults, adopting a more cautious stance against a challenging economic outlook. On an adjusted basis, they earned $2.55 per share, falling short of the analyst estimates of $2.66 per share. They earned $3.58 billion compared to $4.3 billion in the year-ago period. They did keep their quarterly dividend unchanged at $1.28 per share. Analysts currently rate the stock a moderate buy with an average upside of over 10%. And we also heard from Citi. They missed expectations by a wide margin. Their loss per share of 31 cents missed analyst estimates by 38 cents. Their revenue of $185 million was down by 22% year over year and missed expectations by over $14 million. They also revised their guidance for the year. They're now expecting low single-digit increases in the second half total sales, which would be an 8 to 10% decline from their previous guidance. They just have one analyst rating from 3 months ago, so we'll see if any price targets are reiterated following today's report. Now let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by Farfetch on the news of their deal with Net-a-Porter. Under the ticker FTCH, the stock is currently up over 18%. They're followed by Getty Images under GETY up 9.8%, and SoFi Technologies under the ticker SOFI up about 7%. And our biggest losers are led by Nordstrom following their earnings. Under the ticker JWN, the stock is down over 13%. They're followed by ZTO Express under the ticker ZTO, down 8.5%, and Advance Auto Parts under AAP, down 6%. So that is going to be everything for Wednesday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. Make sure you hit that thumbs up button and say good morning in the comments down below. I always appreciate hearing from you guys. Thanks for watching, have a fantastic day, and I'll see you back here next time.